Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with the Streets Options Profits, and together we bring you the Morning Call Express. So the European leaders seem to have come to a deal after several months of half-baked solutions for the European sovereign debt crisis. So the futures look fantastic today on Wall Street, following on the back of the global markets really finishing well in Asia, and Europe is trading really nice right now.
Exactly, but the funny thing is, this is the rally, or it's not even that funny, the rally that everyone loves to hate. The rally that everyone's wanting to make excuses why not to buy. The rally that everyone said, you know what, it doesn't deserve to go higher. But that's when you have to say, you put your bias aside, you watch the technical action, you measure the moves of the market, you look at the participation in the groups, and you overlap that with the headlines. Now, Tuesday we had a little bit of a pull-off day, but every step of this rally or the direction has been met with commitment buying, which has been more important than the actual headlines coming out over in Europe, because those problems are far from over, and you're going to hear skeptics come out all day long saying, well, they didn't really solve it, they put options on the table with a lack of detail or whatever. These are the ones that don't want to trade the market. They're not the ones who are looking optimistic at the opportunities that we have in front of us.
Well, I think the really good thing about the follow-through that we've seen in this rally is that the financials and the insurance names, the big underliers of the market, are participating and really putting some support into the tape.
Well, this is going to make everyone at home feel better, because everyone in their 401ks, they do have some of the financials, they do have some of the insurers, they do have some of the big names, some of the industrials, and they've joined that party. So let's just take a quick look at the S&P. I want to show you here, the technicals that I've been watching. This was that reversal day. This was the most important day of the fourth quarter. This is when we saw commitment to the move, broke that downtrend. Here we held higher. Look, we were at the top end of the range, no pull in, no fall apart. That means you stay with the rally, you do not fight it. Then you had to move to new highs, and then look, yesterday we pulled back right to test that 1220 to 1227 zone, which was that resistance that then became support, and now we're opening at new highs. So at this point, if we could maintain a 30 to 60 minute open above Monday's high, we're going to see that 200-day moving average pretty quick, and that's around 1274.
We're going to look in the energy space for the sector today, particularly the OIH, which is the oil ETF. The refiners caught a bid yesterday. There was a report out of the Daily Mail that Reliance might make a bid, a $48 per share bid for Valero. So the spaces have been trading in sympathy with each other, and this clearly caught a bid.
Yeah, and for those that use sector rotation, we've seen that the refiners have been much stronger. A few months ago, they helped lead the market down with the industrials. Yesterday, we spoke with Stephanie. She started talking about the strength, and I've been seeing it technically. If you look at the OIHs, you didn't even have to really realize what the news was, but yesterday, the OIHs went and made a new high of this recent move, and the spiders have not even done that yet. So that showed relative strength. And then if you look at VLO, which was the igniter, look at this chart. Look how it went through previous resistance, closed pretty strong. And I guess some of the other ones where it had a heavy short interest, they just got out of the way, they had a cover, but this group overall has been acting very well off those lows.
Speaking of the oil space, the world's largest company, ExxonMobil, reports, and in the trenches we're going to follow through again with the earnings theme that we've been following over the past week and a half since we're in the thick of earnings season. And again, that major theme being have to deliver very strong numbers into the quarter, guidance has to be fantastic, and it has to be driven by bottom line revenue.
And if you just want to show from a market timing stance, we had XOM a while back here, a few weeks ago leading into the earnings, and this is when you were supposed to buy it. You don't have to be a brain surgeon to see you had big resistance right here. We started talking about if it gets above 74, it has room, got above 74, and look at this nice move all the way up to 81 coming into resistance. Let's hope that they deliver on earnings, and if they don't, it's priced for a bit of perfection here, so you could see a move lower, but now's not the time to get excited. When stocks break above areas, above pivot points, here's your day to get excited. Not here. Same thing with the markets. Everyone's going to come in today. Everyone's going to be all excited. This is not the day you just jump out and get into tier 1, 2, and 3 longs. You should have been there somewhat already. And today's the day to sell some into the excitement and then wait for a new base or wait for another pattern to keep getting involved.
Okay, so we have a lot on the tape today. We have a slew of economic data coming out, including GDP, jobless claims, natural gas inventory, and a ton of earnings reports.
Yes, and we'll dissect those earnings reports in the long form morning call that will be following us shortly.
Okay, sounds great. I'm Jill Malandrino, and that's your Morning Call Express.